It's all right. Awesome. We're good to go. All right. So you wanted to talk about the minimum wage?
Yep.
All right. Let's. Do you want to just kind of start us off? What's your take on it?
So I'm going off more of an Austrian theory of unemployment, saying that any artificial raises in wage rates will automatically raise cost of production to the point where they cannot actually withhold full employment to the best of their abilities. So I think that having a minimum wage, especially above market productivity, will one either destroy real wages or two will absolutely hurt the unemployment. So yeah.
So on what basis will it? Now I'm assuming you're saying real wages for who exactly? For the entire economy or for just like the
Real wages are they're basically the purchasing power of the dollar. So it goes off the inflation rate and the way price signals work. So as you know, when you increase wages, production doesn't go up with the wages, you're going to have higher costs of production. So you're going to have higher prices. Now, this higher prices will be reflected on the workers. So what we can see is the valuation of the dollar goes lower because prices are going to adjust. The Fed will see that they want to make more investments because they have more money, so they will print more money, etc. So this is how the dollar gets devalued when you have extra amounts of wage rates going into the economy.
Now I don't know if I necessarily agree with that analysis, but I'm interested. So we can look back and see that if we look at the minimum wage, and I believe it was 1968, it would be roughly like $20 today if it was adjusted for inflation. And we've seen over time productivity has gone up, but the minimum wage has not gone up. And so I think that there's plenty of evidence that supports that businesses would be able to pay those higher wages. They just aren't. You can look in corporate profits have gone way up. So the idea that businesses can't sustain a higher minimum wage, I think, just isn't true.
So I'll go off this proposition that is true. One, that's speaking on inflation, that's not quite true. That's one inflation stat where you have alienation, but there's multiple ways to calculate inflation. And those two, I think, are very close and kind of keep the exact same trend.
I wasn't even referring to inflation. I was talking about productivity.
I know, but inflation is the reason why that it's caused this gap in productivity and wage rates. So what we're going to see is that the way that they adjusted more off I think they only did the way the Fed prints, but that's not the only way that inflation is caused. It's also caused by a valuation of dollars as higher wage rates increase. But even then, the Austrians don't believe that it should be lower than productivity or like usage, because free market competition kind of allows that to occur. You're going to have wage rates stay relatively close to productivity or to their market value, where their company are still making turnovers of profit on their labor.
But they're not staying close to productivity. That's my whole point, is that productivity has gone up, but wages have not.
Yeah, but we're also not in an Austrian economic place. We are in a very competition-limiting economy, and even then, the one chart you're referring to, I believe, was an online study. Who was that source again that says which way?
Oh, I didn't even recall what the source was. I was just saying it off my head. We can look it up if you would like.
No. The way that they calculated inflation wasn't even quite true. So because of that, because they didn't take into account for inflation, the wage rates and productivity are relatively the same if we look at two other inflation charts.
Do you have a source to support that?
Yeah, let me see.
It's okay. We can go on to so basically, wait, so can you just kind of I know you've kind of said a little bit. I know you feel like inflation would go overboard, but what is that your main criticism of raising the minimum wage, is that you think that it would basically have a massive devaluation of the dollar, or do you think that what do you think are the ramifications of raising the minimum wage?
I don't think it'd be massive. No, I think it would be there would be some inflation, and the real wages, not inflation, but real wages would go down, or at least basically not eventually after time that change. So it would be the market would adjust, want turnovers and profit, and they wouldn't have the turnovers and profit that they were wanting to, so they're going to raise prices. And then because prices are adjusted kind of towards worker wages, they would eventually increase. So then the workers have to eventually buy these new goods that are higher because of the higher production costs. And it would kind of go, you kind of see what I mean there?
Well, I do get what you mean, but the problem with that theory, at least as it's apparent to me, is that while, sure, companies would have to pay their employees more, and let's just assume that they do try, I think that some of it would come out of profits, but let's assume that all of it, they make up for it by increasing prices. Only workers currently making the minimum wage and anything below $15 an hour, if we're talking about a $15 an hour minimum wage, only those workers are the ones that would see wage increases. And so people that are already making more than that, the cost of that labor does not go up. And so there's no reason to think that the buying power of those low wage workers would go down. At least not to the degree that you're referring to, because while they would be making more, and in less prices. So, for example, the current minimum wage is $7.25. If we raise it to $15 an hour, that would be effectively doubling it. And so prices aren't going to double from that. That's just that it's not what's going to happen. And so the buying power of those workers is still going to go up.
So yeah, the buying power will go up temporarily, but eventually the market will adjust, and we can see this in the United Kingdom.
No, but I'm saying for that adjustment.
Yeah, it would take time, but the adjustment would still happen. I'm not saying that. I think you're referring to that the diverging down of the dollar would just go completely overboard. And no, I mean that the idea of a minimum wage is in a sense pointless, because you're having these wage rates that are going to always be adjusted towards market productivity and market production in a free market. So when you have forcing it to be higher than it is for a short period of time, you're going to see lower real wages over time. It wouldn't be like, I'm not saying it'd be drastic, right? In the United Kingdom, they had lower real wages, but it was barely noticeable. It would stagnated, right? They had a $15 minimum wage. But what we see is that it's going to flatten out. Real wages are going to flatten out, and unemployment especially gets cut off when you have lower productive workers, because a lot of small businesses and even larger businesses don't want to basically take the risk of having to pay you more and you not being very productive in the economy.
Well, so I kind of have two problems with what you just said. One is that I feel like this happens a lot when people talk about the ramifications of raising the minimum wage. They have a tendency to ascribe all the negative things that could potentially happen and say that all of those things would happen at once. That a bunch of low wage workers would lose their jobs, prices would go way up, that there would be massive inflation, and that everyone would automate. That seems to be the main things that people would say. And what's more likely to happen is that little bits of each of those things would happen, and overall it wouldn't have a massive impact. And I think that we can see that with the data, especially if the minimum wage is raised by a reasonable amount. You don't want to just jump to $7.25 to $15 tomorrow. It would have to be done over time. But I think that
what that jump does is it actually just those small jumps, right, will just devalue. I'm not saying like total inflation crashes like 1929. No, I'm saying there'd be slow devaluation of the dollar. And that devaluation of the dollar is negative for a couple of things, right? You have lower trade costs from trading the dollar, and you also have basically kind of a pointless policy that just has a negative impact of unemployment for temporary periods of time. So market.
Well, so and the other thing is when we talk about the unemployment, I would definitely make the case that the demand for labor is fairly inelastic, to the extent that while there could be price changes in the amount, if we're referring to labor as the product in this instance, the demand for that labor is pretty inelastic, to the point where yes, prices for that labor could go up, but businesses still need that labor. So the idea that there's going to be like large layoffs, I don't think is borne out in the data.
And again, it's not always large, but it's decreases in jobs, of course. So if we go, I think Seattle, they had a total, because of I think they went to $13. They had a total net negative of 1,000 jobs lost, right? Now that does not seem like a lot, but that's the thing. Those are 1,000 involuntary unemployment, which is, I don't think that can happen in a free market if there isn't.
You don't think that anyone can become involuntarily unemployed in a free market?
No, I don't believe so, because wage rates are not.
You don't think anyone's going to get fired?
No. Involuntary means you cannot find a job because there's literally zero work for you.
So in your mind, is there a perfect full employment in a free market economy?
Sorry, yeah, I kind of misspoke there, but I mean that there is definitely lower involuntary unemployment, because there's not an artificial wage rate that is taking away the way workers are allowed to work for their productivity, and it's kind of an involuntary exchange in a way.
Could you go further into what you're trying to say? I'm having a hard time understanding. So you're saying that because you have this artificially high minimum wage, you're saying that there will be workers that I guess are lost in the cracks of that you're trying to say that their labor isn't worth that much, basically, so they wouldn't be hired.
So I'm just going to kind of give you. Austrians believe in abolishing the minimum wage, but what we see with market competition, especially unrestricted competition, is that as companies compete for labor, which they want to have as much labor as possible because it's easier to produce, right? And then what happens is they're going to raise their wage rates as high as they possibly can towards tending towards equilibrium. So you're going to have things. So if you produce $15 an hour, they'll get like 14, like as much as they can do with still turning over profit. So when you have artificially high wages, let's say you're producing $13 an hour, but you have a minimum wage of 15, you're going to have to lay off workers, or you're not going to be able to make profit.
No, that's assuming that these people are operating under the most razor-thin profit margins imaginable, which just isn't the case.
No, not razor thin. Again,
It is. Well, because the idea that they couldn't sustain you said 13 to 15, the idea that they couldn't sustain that wage increase, I would be very interested to see any data that supports that that's a large number of businesses in this country.
What do you mean? Like, so you're saying that they're probably...
You're saying that because the amount that they would have to pay the workers would go up, that they by definition would have to lay off people, and that is not the case if they have other areas, namely profit, where that money could come from to pay those people, where they don't have to lay them off, because the demand for that labor is still there. They still need those workers.
Not always, no. Especially if we have unproductive workers, like especially in the restaurant industry, they don't need like child workers. They don't need not child workers. Sorry, they don't need teen workers and like.
Well, I mean, they do to a degree. What exactly are you referring to? Like waiters and stuff? They of course they need.
No, like a lot of teen workers, like because they're unproductive, like compared to like college students and more. Like,
no, I mean someone that works is in high school and someone that's in college. I mean, they're doing the same job.
No, but like productivity, they don't produce as much, so they get.
Do you really think that businesses are making that assessment? They're saying that, oh, okay, that like it's that finite, where they're saying that like, oh, I think that there are tasks laid out. I think that most people, anyone that's had a job can see this, is that there are tasks that are laid out, and sure, some people are going to be more productive than others, but there's a uniformity to it where it's not these like microscopic calculations that are being made by your employer, where like everyone's being paid slightly different.
Yes, but when you have artificially high wage rates and you want to keep a certain profit margin, you're going to want to keep as much profit as possible. That's kind of the point of capitalism, right? So you're going to have people that see these artificially high wage rates and they're like, I can't keep the profit margins I want and have two workers getting at $15 an hour. So they're going to see which one is more productive. And oftentimes it is the lower productive worker, of course. So they're going to fire them, right?
No, but that's acting under the assumption that the duty that the unproductive worker was doing wasn't necessary to the business. And I don't think that businesses make a habit of hiring workers that they don't actually need.
No.
Like that's not the way that business works. They don't say like, oh, okay, they see, okay, what needs to be done, and they see how many workers they need to get that thing accomplished. And so then they make their calculations from there. They don't say like, oh, I guess I just need half as many waiters now.
No, but when
especially if they have the profits to sustain it.
When you're losing profits, though, which can happen when you have artificially high wage rates, you have to make decisions like this. And if you want to go into debt,
we can see that corporate profits were lower in the past. If we look at where it was in 1968, they were much lower, and businesses were able to still sustain the same amount of laborers.
So wait, so do you have like a chart for that?
Yeah, we can find it.
So let me just skip this. Okay, so they had higher minimum wage, right, on inflation, right? And they had much lower profit margins, and they were able to sustain minimum wage, right? And I'm curious, was the unemployment rate higher or lower than today?
I imagine it was lower than today, of course.
No, I'm not talking about like pre-2019.
Pre-2019. Well, I mean, I mean, what point of 2019 are you talking? Like, what are you?
Pre-coronavirus.
I don't know off the top of my head, but I mean, I kind of care about where we're at today. Let's see.
I'm talking more like, because they had higher wage rates, right? Was the unemployment rate higher or lower than today, like pre-coronavirus?
I mean, I could say yes or no. I have no idea, and I think that you're just kind of speculating that you're going to say that it was higher. I think
no,
a lot of reasons.
I'm asking you because I thought you had the data in front of you, but because that's also a point. Because maybe they couldn't sustain it. They might have had lower profit margins. Maybe they had higher unemployment because they couldn't sustain it. It's like a big part. If they have high wage rates, they're going to need. They're going to need to possibly lay off people. That's kind of
that's an awful lot of speculation. But I'm still. I mean, do you have anything to support? I have the chart here, but it's not letting me copy it. Do you have anything that supports that? Like, there is a large number of companies that are operating on a profit margin that is so slim that they can't sustain and higher wages for their lowest paid workers.
Is a restaurant business in Seattle, right? They had high minimum wage rate. They had a high wage rate there that was artificially high. They had a total net negative 1,000 workers lost and 1,000 jobs lost in the end in the restaurant business.
So 1,000 jobs lost, and you know, I don't want anyone to lose their job, but I'm not saying that nobody would lose their job, but I'm talking about you're saying that like, oh well, it wouldn't be large numbers. Well, if it's just work jobs between the cracks, I support other policies that would help alleviate the net negatives of stuff like that. And then overall, workers are being paid more. Now you can say, oh, well, I don't support any of that, but like I support unemployment benefits. I doubt that you do. So it's like, if we're saying like, oh, we don't want these workers to be laid off, but I support things that would alleviate the suffering of those workers. I think it'd be a smaller number than what you're letting on to be.
No,
but
that's kind of going through the Austrian school. Like they're not going to have jobs laid off just because of a policy like it was a $13 minimum wage that did that. So they had a policy like that, a $13 minimum wage, and it lost 1,000 jobs. Normally, that industry is gaining tons and tons of jobs, but a thousand workers got laid off. That's a big jump from being a net positive in like a couple of years to a net negative of 1,000 jobs from then. So this is the thing, that minimum wage, especially when raised higher than it is today, you're going to have things like this happen where you're going to have workers losing their jobs. You're going to have the devaluation of the dollar to the point where the minimum wage is kind of useless. So
no, you still didn't really adjust for what I was saying, because I said that yes, well, maybe if we're assuming that all of the amount that they're having to spend on the increased price for labor, let's say they put all of that into increasing prices, that still would be a smaller margin than what is increasing for how much those workers are being paid. Like the amount that their wages would go up would be more than the amount that prices would go up. And so they would still see a positive. And you're saying that, that it would take into account over time. I'm saying once those price hikes happen, then they would still be making more.
I don't really see how there's really much evidence, because we see this.
There's plenty of evidence for it.
Empirically, that's I think in the United Kingdom that was untrue. The real wages didn't really go up ever when they raised the minimum wage. I don't think real wages in Seattle, I think their cost of living actually went up, and I think because it's a kind of a multi-effect. It might create small amounts of jumps for a short-term period of time, but eventually the market will adjust to productivity. So productivity will eventually go back to where it used to be, and the wage rates will kind of fluctuate with prices to get back towards equilibrium. The market will tend towards equilibrium, and I'm pretty sure that's kind of the idea of, yeah.
Let's see. I'm trying to get this thing. So what data specifically are you looking for, or what data are you pointing to? Because I think that you are making assumptions on what would happen. And I get what you're saying, this thing that, it'll always trend towards equilibrium and this and that. But I don't think that there is a basis for what you're saying. And you're saying that we can look at the UK. And frankly, I've seen a lot of data that supports that what happened in Seattle was very successful, and that the job loss was minimal. And you're saying that 1,000 jobs were lost. And I don't think that
I don't think I've ever said that it'd be this catastrophe of 20% unemployment. No, but I'm saying there would be jobs lost involuntarily.
And I'm saying I support policies that would alleviate the jobs lost.
But those jobs
overall, what'd you say?
Those jobs are still lost, and it's still a problem. They're unemployed and they can't find work.
Well, you're not saying that they can't find work ever. And I support, like I said, like if we're talking about jobs that I support, I support tons of infrastructure jobs. I support jobs that will public works programs that'll give those people jobs. I support unemployment benefits that'll help those people get back on their feet until the time comes. I think that what you're saying,
way lower wages because those caused by other taxes, because you need taxation for those things.
Excuse me?
It'll also kind of lower real wages because you need taxation for those things, those policies.
Of course, you need taxation for those things, but
those will in turn lower their real wages even more.
See, I would like to see the data that you were pointing to, that when the minimum wage is raised, real wages do not go up. I would like to see this data.
Okay. Let's see. I don't know. How do I link it? But if you have something while I'm pulling that up to get, just let me know. Let's just say it right now. Okay. I'm pulling it up right now. Okay. So this was UK unemployment figures. How do I don't really have it. I'll send this. I mean, I have it, but how do I send it to you? I mean,
there's a thing that says private chat.
Oh, okay, I got that. Yeah, that's not bad. I don't really have it, but yeah, let me send that there. So this is in the United Kingdom, especially the real wages. So unemployment didn't really change there, but the real wage growth completely changed there. Real wages almost stagnated, or I think they went down for a part in 2016, where I believe it was implemented.
Did you send it?
I sent it in private chat unless it didn't send through.
Let's see. Wait, looks like it just got something. All right, let's take a look at this. UK unemployment figures January 2018. Strong employment gains, but continued weak wage growth. Let's see. Did you have a specific part in this?
Just look at
that
the.
you want? Let's see. People in work to thousands, left axis, real wages, 2015 to 100. 17. All right. So what am I looking at? Walk me through this.
So 2016 is when the.
So wait, employment went up. If we're not
No. This is because real wages eventually adjusted back to markets. So 2016 is when it started.
Wait. So they instituted a minimum wage, and you're saying that they adjusted that back to where they were before, but that can't be possible if they raised the minimum
Purchasing
wage.
power again. If real wages are changing back to equilibrium, unemployment will be unaffected. Unaffected. I think I've said this before, but so go to 2016. That's when it was implemented, right? So you had a raising. You have raising. You already have raising real wages, and then it stagnates and then goes down from 2016 to 2017, and then onwards.
So this blue line is the unemployment. This is real wages, and so
left in work. So those are people that are working currently. So
okay, and so let's see. And the minimum wage was instituted in, or the minimum wage that we're talking about,
2016.
2016. I mean, it looks like real wages are roughly the same.
No, but they went down a little bit and they stagnated when they were going up.
I mean, it's stagnating over this. I mean, what's it look like? It looks like we're looking at like maybe like a couple months.
No, that's.
And what was the minimum wage increase?
I think it was. They go. I know it was like
because it doesn't even say anything in here about a minimum wage increase.
And
these are real wages for who exactly? For just all workers?
All workers, yes.
Well, then that doesn't really make sense. That the minimum that I'm talking about the wages of the people that are being paid the minimum wage. That the real wages for them would go up. I'm not talking about the real wages for overall workers. I'm talking for the wages for the people that are making the minimum wage. That is what I asked for data on. This is for the overall wages, and I think that it looks like there's some stagnation from the years 2016 to 2017. But that's not what we're talking about. We're talking about the wages for those people that are currently making the minimum wage. Because I'm saying that their wages would go up.
Those are calculated in them, and I'm sure. So that's the point. Those are calculated in. So everything kind of changes, and even then, because
no. I don't think you get what I'm saying. So I'm saying, so if you work at McDonald's and you're being paid the minimum wage, and your wages, let's say it goes, you go from $7.25 to $15 an hour, your real wages will go up. Yes, there might be some price increases, but your real wages will go up.
I mean. It will at the start, right? But eventually,
no. Wait, that doesn't make sense because you're pointing to this data that says that the real wages for the UK just overall are stagnated for this. Looks like this 6-month period. It has nothing in here about the minimum wage.
It has a period. But
what'd you say?
I think that was a 3-year period. I think it went down even and then went
3-year period. I think we are looking at very different charts. And a 3-year period. I mean, it looks like the chart goes. Can we agree it goes like 2018? Is that where it's supposed to stop, or does it stop at 2017?
2018. So I think it was
2018. I mean, if we go back 3 years, 2015, that wages are much higher 3 years ago. I'm sorry, much lower 3 years ago. The wages have increased over the 3-year period in the graph that we're looking at.
The stagnation is over. It's a trend. This stagnation happened and even went down a little bit.
What are you talking about? Over 3 years?
No, I misspoke. I meant 2 years. I wasn't looking.
Over 2 years? 2016? It's higher than 2016 too. It looks like they're lower than they were 2017. There was a slight dip. It looks like beginning of 2017, and then they're slightly up at the end of the 2018.
Yeah, but the trends were all messed up and it's flattened.
Yeah. Well, I mean, there's nothing here. You haven't told me what the raise in the minimum wage was.
I told you it was up to 15. I think it was
from 15 to what? Like you could, but you're saying it was instituted in when? 2016.
2016.
But the wages are up since 2016.
The wages, but it's the stagnation that matters.
What are you talking about? The real wages are up in the graph that you just showed me, and that's for all workers. I'm talking for low wage workers. It probably went way up.
No, they went. The trend is what matters because real wages were already going up. It's the same kind of lot. So real wages are going up, but the $15 minimum wage stagnated them for a while. Then they're going to eventually adjust and go back to the trend. I don't know how you don't see the stagnation there. Did I send you the wrong graph or something?
I don't think so. Okay. Real wages are going up. In the graph that you showed, are wages up from 2016 to 2018? Can we agree on what we're looking at?
So yeah, let me just pull it back up. Okay, so from 2014, let's go back. So 2014 to before 2016, real wages were already on a high trend. It's
Okay.
headed in 2016, and they completely stagnate.
They do not completely stagnate. They are up.
The orange?
The orange line is higher in
No.
2018 than it was in 2016.
It started at 2016. It was
Okay.
So
I know, but the number is high. The line is going up from 2016 to 2018. This is for real wages for all of the UK. This isn't for minimum wage workers.
I don't. So no, it starts in 2016. So the 2015 before 2016, that quick jump, what you see, that quick jump in is before the minimum wage is implemented. The 15.
So the quick.
So you see how it starts. It stagnates in 2015 for a little bit, and then it raises, right? So then that was before the minimum wage increased. From 2016 to 2017,
do we have something that says that that's when the minimum wage increased, or like anything about the actual minimum wage?
I mean, if you want to look that up, I'm pretty sure I'm correct here. Really.
Well, but we're talking about. But my argument is that I want to raise the minimum wage because I want the wages for low wage workers to go up. The real wages for low wage workers to go up.
Yeah, and I just don't think the chart supports that, especially because it was after 2016. I think
this chart is for overall workers, and it does show an increase in wages.
It shows an increase of real wages before the minimum wage was implemented. And then as soon as the minimum wage was implemented in 2016, it had a stagnation and then a dip in real wages from 2016 to 2017.
But this is for overall. We're talking for low wage workers. This does not account for it. Like, I mean, what this could mean is that like people in the finance sector that their wages went down for this period, and
their real wages would probably be actually going up because they do not have a minimum wage affecting them. The only thing that would probably change this would be a minimum wage in the lower.
You really think that the only thing that affect the wages of a country are the minimum wage?
No. I said those wages would not be affected as much as the lower income workers. What do you think matters more?
I think that the real wages for those low wage workers went up in that period, and I would be very interested to see some data that says that they didn't.
I mean, there's pretty much a chart, but still, I mean,
what you say? Wait, no, but the chart isn't about the workers. I'm talking about the workers that saw wage increases, because you're trying to say that you're trying to say that the raising the minimum wage is meaningless. I'm trying to say no, it's not, because it raises the wages of those low wage workers. And now you're saying because real wages in the UK were somewhat stagnant over the end of 2016 to 2018, that means that the low wage workers, they didn't see a real wage increase.
But then it actually went down in 2017.
No, but once again, this chart isn't for the minimum wage workers. I'm talking about the real wages for those workers.
And all those workers are still accounted for, so it would still.
They're accounted for, but there's so many other workers involved in that where it's really not helpful to talk about that.
That would actually probably even be more so, because those jobs are not quite affected as much.
You can't just say it would probably be more so without actually showing me that. You're saying that this chart that doesn't show that proves that, but it doesn't.
So it shows real wage stagnation, and because that workers that are not affected by an artificial wage increase would not receive a change in real wages based off of government policy. So I don't see how these workers would just eventually stop. And then
wait.
The implementation of the $15 minimum wage completely would change the fact that you have these real wage workers would have real wages on workers would eventually stagnate, and then it went down, and we can see this in the chart. But
this is for overall workers in the UK, and there are so many variables that could go into what we're looking at right now. Okay. And you aren't showing me like some analysis that shows what the real wages of low wage workers in the UK over the course of this minimum wage. That's not even close to what you're showing. So what you're showing is,
if we want to just go back into theory, I mean, we can do that. So you didn't you never really refuted any of the theoretical points.
Okay, all right. So let me bring up the theory of what I'm saying, and then you tell me.
No, yeah, I mean more of the theory of Austrian unemployment, like
the theory of Austrian unemployment. I want to hear you put a theory. I don't care what the Austrian School of Economics says necessarily. I want you to make an argument.
Okay, so it's basically that artificially raising wage rates above equilibrium will in turn decrease unemployment.
Will increase unemployment, you mean? Yeah. Okay, and so I think that is potentially true for maybe some of the margins, that the unemployment would go up for slightly, but I think that it's pretty easy, if we're just talking about the theoretical, to see that the profit margins could just go down. Like if we're just talking about theoretical, that's why I think it makes more sense to talk about the data. But if we're just talking about the theoretical, then businesses, they could just take smaller profit margins.
So why would companies want to really do that if they're not doing it already? And even increasing in unemployment would still not be a benefit.
Because you're acting under the assumption that the workers can just be fired willy-nilly. These people have a job that they are hired to do, and that they have roles. Like if I'm a restaurant owner and I have I know that during this period I need 5 waiters on staff. That's that's what I need. There's going to be this many people coming in. I need 5 waiters on staff. If there's a minimum wage increase where I have to start paying someone $1 extra an hour, that doesn't mean I no longer need 5 waiters on staff at that hour.
No, I've never. Yeah, it could possibly mean, especially if you have that high of a jump. We saw from. This is the thing. Let's say it goes from 9 to 13, which I think is the presupposed plan, or 7 to 13. Is that the first jump that they want to make?
The 7 to 13. Well, I don't know exactly what you're talking. Are you talking about just in general here in the U.S.?
Yeah, so they want to make a jump eventually.
15.
It's 7 to 15.
It's currently 7.25. We want it to be 15 eventually.
Okay, no, like is it a right-away policy change?
No, it's not a right-away policy change. It'd be over time. Like places that have implemented this, like Oregon, it's like a quarter every 3 months or so that raise it.
So yeah, they would still eventually they would lose profits because of this, and then eventually that wage increase would have a large effect on stagnation of real wages. And I'm just going pure theoretical for that. And then
wait. I need you to say why.
So because of the purchasing power of the dollar would go down because they have more money in the economy, and because of this.
No, wait. The actual number of dollars in the economy does not change.
No.
There are so many other things that would affect the amount of money that are in the economy. But with simply changing the distribution of the revenues of a business does not add more dollars to the economy.
No, I don't. I think I must have misspoke there. My bad. I meant more that they have to increase prices, and they have to, because prices of production, which increase prices. Therefore,
no. The price of production does not inherently increase prices because they could just take smaller profit margins, especially if they know that by raising prices a significant amount, they would lose out on demand from people that are, because I'm sure
not exactly.
No. Well, no. You don't think that if McDonald's raises the price of the Big Mac from $3 to $5, that there are less people that would buy Big Macs?
Possibly not, because every other company is increasing their productivity because they have to. And
wait. You're saying that nobody would? There are not going to be people that don't buy Big Macs anymore if there's that'd be a pretty big price increase.
No. So no, because you have to take into account that everyone now has at least $15 an hour, right? So they can buy more with that $15 an hour.
Not everybody though.
Everyone is making at least $15 an hour.
Everybody would be making at least $15 an hour. Yes.
It's worth.
There are some people though that were already making over $15 an hour.
Yeah, but I'm saying at least $15 an hour, so they have more money to pull from. So people would possibly take the $2 extra because every company would have to increase their productivity, so they would have to increase pricing. They're not going to want to lose profit margins. If they're going to take smaller profit margins, that's not what they want.
But we know that these companies have operated on smaller profit margins before, and corporations don't just run the world where their profit margins are ever increasing, and eventually they're just going to be massive, and we can't do anything about it because if they take a slightly less profit margin, they might slightly increase prices. And these companies can't sustain smaller profit margins.
And even then, if they could sustain smaller profit margins without state coerced competition, these things would already occur anyway. So if they have productivity, which they're going to basically in free market competition.
Wait. I think that it's really important what you just said there, because I think that that's not true. So you said that companies are already operating on the lowest profit margins they can.
No. I did not say. I said in a free market competition, if they could operate on these profit margins, or if they would want to with competition.
I want to talk about with the economy that we have right now, because I know that if I say, well, what that doesn't apply to right now, but you're going to say, well, we're not in a free market economy. I'm talking about right now. Well, in our economy, in our mixed economy that we have, it's not a free market economy.
Yeah. So then you would still have. So if we abolish minimum wage now, of course, that would not be very good. There's so many things prohibiting competition to occur. Like the state is allowing Amazon to lobby, especially. So you don't have, when you have a free market, which I'm going off pure theory here. Okay. You're going to have wage rates that are going to reflect productivity. We can see this in Denmark and before you have before the minimum wage. The real wages,
the high wages in Denmark are the result of unionization.
Yeah, and again, those are free market market unions. So they were not created by the government. They don't really have power in government at all. They are basically private unions. They are not. I don't know if it's really called.
I mean, they don't have things like right to work laws like here in the U.S. Or there was no Taft-Hartley in Denmark that made it more difficult to establish unions.
Austrians don't reject those kind of unions because they don't have power above what they have to. They have power granted by the union itself in respect for the workers. So
just to be clear, I think both of us probably support getting money out of politics, like ending the ability for corporations to lobby politicians. Do we both agree on that?
Yeah.
Okay, I'm glad. I'm glad we we agree.
That's how the Denmark unions work, and they have absolutely no minimum wage there, and they still have very high.
Well, that's a little misleading because the other companies do set their prices based on what those unions bargain for.
Yeah.
And it's slight, and there are some provinces that do operate with effectively a minimum wage, where they have a different. They have actual minimum wages.
Minimum wage, but it's not enforced, and it's also again bought by unions. And then, so we'll just kind of go back. So when you have a free market, you're gonna have, I guess, free market unions that don't like absolutely destroy unemployment rates by artificially raising it a ton. They're gonna go by productivity, right? And then you're going to have free market competition where they want to have as much labor supply as possible, and they're going to basically the competition will increase wages as much as productivity, and it will increase real wages along with productivity growth.
So I think that we're dealing a lot in the theoretical with that. And I imagine, I mean, would you like to kind of move away from the, because I obviously have tons of disagreements with why what you're arguing for is even possible.
I would like a theoretical point.
What'd you say?
I would like you to answer the theoretical point and give me a reason why using a theoretical answer.
Okay, the theoretical point of what exactly? Because like right now you're saying that like we can talk about what you're saying would maybe happen in this free market, and I would love to talk about why I don't think that that's possible and why that's
then
frankly not. What'd you say?
Why a free market would fail at doing this?
Why a free market would fail at doing this specifically? I don't think that it's possible to have this free market that you're talking about, and I would be interested to see. What do you say?
Not the point of the discussion. I would like to see, with laissez-faire capitalism, why real wages would not go up in product.
Well, no, I'm interested. Why do you want? Because we both acknowledge that that's not the economy that we have right now, right?
I know, but that's not. I don't agree with the economy we have right now. All right, we have too much.
So you do agree with a high minimum wage for what we have right now?
No,
Wait, then let's talk about that.
I don't agree with the minimum wage at all. But I'm saying that I don't also agree with the tons of restrictions on competition we have. What I'm trying to say here is, I want you to answer the pure theoretical point. If we had a laissez-faire economy, why wouldn't wage rates go up to productivity with unrestricted competition? And then would not increase real wages without the unemployment negatives that we both agree that would be slight. I think we both agree would be slight unemployment changes. So
you're trying to ask me what? So okay, you want me to ask why what wouldn't happen or why what would happen? Why?
No.
You're saying that wages would be higher?
No. I said that they would be at equilibrium, or they're not at equilibrium. All the Keynesians will get mad at me, but around equilibrium, and then they will kind of have the increase of real wages because of free market competition.
Within the theory that you're talking about, I think that it's perfectly reasonable to say that wages would reach equilibrium. I think that that's fine to say. I don't have an inherent because I feel like in this specific theory that you've described, I don't think that it's possible for that to occur. I don't think, but I guess given this scenario that you've painted, it is possible that the wages would go to equilibrium or be as close as they can to equilibrium. I think that there's a lot that happens on the way to equilibrium that matters. And I think that the path to get to what you're describing, I think that matters. But in this world where people are acting purely, there's so many assumptions that go into a world to act like how you're describing that I don't think that it makes any sense to talk about.
So you're saying just because it's a hard thing to reach that
I think it's an impossible thing to reach.
Okay, but so because of that, it discredits the theory.
I don't think it discredits the theory. I think given the standards that you have put forward, given the assumptions that you are making, I would say that the theory is accurate. I don't think that those assumptions can be met, though. Is what I'm saying.
So I would, but still, so you have zero contentions with the other than the practicality of the Austrian theory, though.
The idea that in a perfect free market where everyone is equal competitors, there is no restrictions to the ability for labor to transfer from here to here. I mean, we can look. I mean, Adam Smith said this too. That for this to be for a free market to have this perfect equilibrium that what you're describing, that there's perfect liberty. And I don't think that's possible.
Equilibrium. Markets can't reach equilibrium. I mean, to
get as close as possible to equilibrium. That's the theory, is that they will constantly be moving closer and closer to that equilibrium.
Yeah.
So yes, I think that given those assumptions, sure, but those assumptions haven't been met, and I don't think it's possible to meet them.
I mean, historically they were close, but again, the state messed that up. In
So do we want to move now into transition into the real world of those things?
Okay, so you're saying that you have no issues with the Austrian theory of unemployment, right? That artificially high wage rates can cause, because I think you said this earlier, it can cause minimum unemployment. I think that you kind of agreed.
My contention is with trying to apply the Austrian theory that you're describing to the real world. That is my problem. That is my contention. I think that it's a fine theory, but I don't think that it is in any way applicable to the real world.
No. That was a lot of this fair comment. But I'm saying that the Austrian theory of unemployment is that artificially high wage rates will cost production and then will kind of eventually result in unemployment. I think
that it would result in some unemployment that can be mediated in other factors.
Not like 1929 depression, 10%. Like no, I mean like small, like either loss of jobs, and that's again loss of jobs is not going to count in small unemployment.
Unemployment, sure.
Yeah, it would increase the unemployment rate a little bit. I think
that the amount matters, but yes, I think that it stands to reason that there would be some job loss. It could be one job, it could be 100 jobs. I think that it matters how much the minimum wage is going up. I think that matters a lot of things, but I think that it is not out of the realm of possibility that there would be some job loss that I think could be mediated by other things.
Okay, so I think the only thing that we don't quite touch base on is real wages, and I think, do you want to revisit that, or do you?
We can. I still want to hear any, because I feel like I wasn't fairly looking at the data that you put forward, and so I want to address that. So do you not see why I have a problem with when we're talking about this discussion about the minimum wage? Why looking at just overall real wages in the UK when we don't know exactly when this minimum wage was instituted? I tried to Google it. It looks like it was in April, I think. The chart, it's not specific about when these wages. I mean, it looks like from the chart, it could have been that big increase could have been when the minimum wage was instituted. But why I have a problem looking at real wages in this regard? And I've also never made the claim that raising the minimum wage would increase real wages for everybody. I wouldn't say that it would increase real wages for minimum wage workers.
What I'm trying to say is that given time, right, the market will eventually adjust and the companies will realize that they're getting more money because they can increase prices because demand will go up as increasing wages go up, right? So what will eventually happen.
But not everybody will be getting more money.
But like the people that weren't making a lot of money, like before, they now have, I think, $8 extra an hour to spend. So they're able to now buy more. So that increase in demand for these people will then take real wages, and they will flatten because they will understand there's higher demand, and then the higher demand will increase pricing because they will increase pricing. Sorry.
So okay, and frankly, I think that that's why if there might be nuggets of truth to what you just described. I think that's a good reason why minimum wage should be tied to inflation. But I'm interested to hear what you have to say of the prospect of someone that is working full time and that isn't making enough to survive. Do you view that as a problem?
And I would largely like to point this problem towards not having free market competition, because there's tons of people right now because of just pure monopolies, which I think actually pure monopolies that are coerced by the state, I think would increase under minimum wage. And then you would also have, and that's hurting workers because companies can't compete to continuously have output productivity because they don't have to. They have lobbying by the government. They have.
We're both against lobbying.
Yeah, but I think that would have a huge impact if we took away lobbying and subsidies, because now we couldn't have monopolies of coercion, and they would be able to compete for these jobs, and they can be able to compete to increase wages.
So, I mean, I think that, like I said, I think that there are slight things that I agree with to an extent. I do think that companies like Amazon and other big tech companies, namely, should be broken up, and I think that they have immense amount of monopoly power, and I think that lobbying to the government should be put an end to. I don't think, though, that is a reason to not raise the minimum wage. I think that there are other ways to counteract that. I think that when you don't want to raise the minimum wage, and so the only way that you're fighting monopolies is by keeping the minimum wage low, I have a problem with that. And I'm interested. So what do you have to say about the prospect of someone that's working full time that isn't making enough to live?
I mean, I think that's not necessarily a good thing at all. But
I'm not trying to describe like bad morals, like you don't care or anything.
No,
But I mean, what do you think should
I-
happen about that?
productivity, right? If they're not producing enough to want whatever standard they have to live, then I don't think it is an unethical thing.
I mean, it's not really a matter of wanting. It's that the amount that they're making does it. It's not that they want a higher standard than what they currently have. It's if the amount that they're making they can't live for a prolonged period of time on.
Better means they're not producing, or they or there's most likely a government force that is not allowing competition to increase wages towards productivity, which I think.
No, but I'm sure that you would agree with the fact that if there was no minimum wage, that there would be people who would be working for incredibly low wages that would probably not be making enough to survive. I mean, do you disagree that that is something that would happen without a minimum wage?
No, because what would happen is that they would see that that would drop prices tremendously, and they would have the higher purchasing power of the dollar.
Now, I would. So you're saying that without a minimum wage, there would be enough drop in prices that people would no longer. People would be able to live on whatever these low wages would be, $3 an hour, $4 an hour.
Completely taking into account that competition just doesn't exist anymore, which is the only way this could happen. What would happen is you would have the producers for, let's say, the aerospace industry, where everyone is making a high wage generally, right? But because of the people that are producing the aerospace industry's materials, they are the ones that are, let's say, getting paid $1 an hour. So they can sell the parts for tremendously cheap, and the same kind of trickle effect kind of goes down. So now they're able to cut prices, and then eventually real wages will go down to the point towards equilibrium, because they are going to have a purchasing power of less. The dollar will have less purchasing power.
I feel like that didn't necessarily. What do you think should be done about the minimum? Because I feel like it's almost a convenient fallback to say, like, well, in a perfect market, this would work.
Yeah,
but what about today, though? Like, I'm sure you support getting rid of the minimum wage today, don't you?
Not right off the bat. I think we need to stop lobbying, and we need basically allow free competition, or you're going to have people.
So would you put ending the minimum wage on the back end of issues that you think should be changed?
Yeah. Well, the first thing I think that we should do is end lobbying and restrictions.
That's actually my number one issue too. So I actually feel like that's a decent point to end on, because I also agree that that's probably the most important thing that we should do is end lobbying.
Again, a lot of my things are completely in an Austrian school, because in order to have this, you need free competition, right? Free competition will mitigate all issues that the minimum wage does not have. It's artificially trying to produce towards productivity, and it has unemployment effects, it has real wages effects, and it also has monopoly effects. We can see this in Amazon. They are the number one people trying to buy this, because they know that they can buy everyone else's labor as soon as the $15 minimum wage occurs. They can afford it because their profit margins are through the roof compared to every other company, and they can take this drop in profit margins, but places like TJ Maxx or like Office Depot can't. So they're going to take all those workers, and they don't have any competition, and they can now do whatever they want.
See, I think that I completely agree with lessening the power of Amazon and diminishing their ability to lobby, hopefully getting rid of it, and getting rid of their existence as a monopoly. But I think that if we had a perfect free market, I think that it makes sense to have a bare minimum wage. That way, there is no one that makes the minimum wage a living wage. That way, there's no one that is working full time that is unable to support themselves, that is unable to survive.
And with free competition, that's impossible. They're not going to take wage rates that are below. They're not going to do that as a person. And even then, if they decided that the competition would occur, that you would have people that would see that they can make more from these workers, and they can make more from producing, and their profits would increase because they have a more efficient good.
See, I think that opens up a whole nother can of worms, this idea that nobody would ever take a job that isn't, but I don't think that that's really operating in the realm of reality.
No.
There are geographical limitations. There are all sorts of limitations that prevent people from necessarily getting to this perfect job and this perfect competition.
I never said that they would never take this job. I'm saying that competition would give them a better option. So you would have, let's say, a $5 an hour versus a $7 an hour, and you're producing $8 an hour, right? You're going to want to go to the $7 an hour, right? Just naturally. And they're going to want to continue to expand. And because the company making $5 an hour has less labor, they can't expand at the same rate as those people with $7 an hour wages because they're producing more. They're more efficient workers. They are able to do more.
I like I said, I think that we're really operating in the realm of theoretical there, where I think that I could just as easily lay out a theoretical that says where, well, this person that they're paying less and they're actually able to expand more because of that, and then eventually it drives the wages down.
No, because you would not have people working for them in the first place.
But that's acting under the assumption that people are with this perfect control over whether or not, and that there's no like people have the ability to like not work for a while and then then I'll find the job that I want. That's not something that really happens necessarily, especially if we're operating in this society that there's no welfare, there's no unemployment benefits, there's not where people don't have that luxury necessarily, where they need to work and they need to work today.
We'll go to McDonald's versus Arby's. So this is just an example. It could be interchangeable. And the production is the same. They both are producing for the company $10. So they are all close in the geographical areas. So you have, let's say, 100 workers. Now, McDonald's wants to increase, again, how many McDonald's places there are because that's good for profits. So they're going to have McDonald's giving $10 an hour, which is kind of the bare maximum they can go to. And then you have Arby's, which is giving $5. So naturally, workers are going to try to go to a McDonald's, right? And McDonald's is producing more than Arby's because they have more workers. More workers means more production, possibly means that they are more efficient at doing what they do. They can produce more, which then lowers prices. And then Arby's, because they have a lacking of workers, will eventually lose efficiency. They will lose production. So they are not taking as much profit, even though they have lower prices possibly. Their production and then what they're getting consumers are consuming is way lower. So McDonald's is able to make another location that drains from more Arby's workers. You have kind of the same thing. And because Arby's is now willing to raise their wage rates higher, McDonald's is going to destroy them.
So, I mean, did you just describe how a monopoly would form in this scenario, and then McDonald's would eventually be able to lower their wages because there's no other competition?
No, there's other competition. You can throw in like a Burger King there, but I'm trying to say.
I'm saying, well, this is actually a bit of my problem with this theory is that eventually you would have. I mean, this is almost by definition what happens with competition is that you have companies that get larger, or they wouldn't be companies, I guess. They would be businesses and entities that get larger and that they become more efficient as they get larger. You know, economies of scale is a factor. And because of that, they can outsell their competition, they can crush them. And then they're so large where it becomes almost impossible to compete against them. I think an easy example is with banking. I mean, it's really easy to see how a larger bank has so many advantages where it would be almost impossible for a small bank to usurp their clientele.
Okay, so with that, you would still have to say that the same logic would not apply to another business that, yes, there might be 10 McDonald's, but if they're all one giving laborers $1 an hour, everyone's going to be attracted to the one business that is giving $10 an hour, so they're able to increase productivity.
Why would they be attracted to the business giving $10 an hour? Or you're saying laborers were?
Yeah,
laborers. If the Arby's only has room for one person, I mean, there's a lot of people that still have to work at McDonald's, though.
They only have room for. Why would they only have room for one?
Or they only have room for 5. You get what I'm saying? I mean, we're operating in this realm. Arby's would obviously have some sort of capacity, and the rest would have to go to McDonald's.
The productivity would be higher because McDonald's is taking. There's only 100 workers here, so McDonald's is taking.
But when did we establish there's only 100 workers? See, this is why I have a problem with these theoreticals. Is that we're like setting these like assumptions and these standards that I could say, well, what if this is the assumption, and what if this is the assumption?
Yeah. Let me clear. I said at the beginning there was 100 workers, but
did you? Okay, maybe I missed that.
And then. Even then, you could. That's a variable. It could be 1,000 workers. It could be whatever. That's how it works. There's only so much supply of people that are willing to work fast food, and how much they can actually do for. But even then, so them increasing productivity, right, will increase profits. So McDonald's is losing profits because they don't have as much workers, and Arby's is now able to expand. And so doing this would not be a very good sustainable goal to just destroy wages. It wouldn't be a sustainable goal. They want to increase profits as long as possible. Having a short profit gain is not good for sustainability.
Now, here's the thing. What if these people that are working at McDonald's are making so little where they're making just enough where they're maybe barely getting by, but they don't have enough. They are not making enough to save where they could take the time off to go apply at Arby's and go get that job, that better paying job. And so they're stuck at McDonald's.
Oh, so they can easily just, after their hours are done, they can just kind of go. I
They're
mean,
working they only make $1 an hour. They're not making a lot. They got to work long hours. And you can say that they could
and that's
easily
not
do that.
good.
And that becomes a bit of a personal responsibility thing. But I'm saying that there are people, I think that we would both agree that there are people that are maybe barely scraping by. And when they clock out, they're not going to go apply somewhere else. And I
Well,
think that that's the thing. Even if you're saying that they should, that's different. But whether or not they will is another thing.
yeah, and that's the they. I would say that most people are going to see that big of a discrepancy in wages, and they're going to want to apply there. And it's especially when that means you don't have to work as much hours, and also working that long is also not good for productivity.
I'm saying if they don't have enough money to even stop for a little bit, these
Yeah,
people are not making very much money at all in this scenario that we're describing.
yeah, and especially if there's an Arby's that is giving you $10 an hour.
If there's only one open job, if there's 10 open jobs, there's 50 McDonald's workers, they can't all go to the Arby's.
Yeah, so then what happened is because Arby's is more productive, they were able to expand because they're more productive.
No, when did they become more productive? They just were offering higher wages. That's the only thing. At no point did they become more productive. McDonald's is larger. They would be more efficient.
So McDonald's, no, that's they would probably not be more efficient because
Why wouldn't they be more efficient? They're larger.
they're losing more workers. They're losing workers to Arby's. They no
Well,
longer.
we don't know that they're losing workers to Arby's. You said that they would apply after work.
What did you say?
You said they would apply after work. So they didn't lose any workers to Arby's.
Find a job, pretty much. They could see that there's a $10 an hour opening, and they could quit their job and then go for that job. That's how.
But there's scarcity of that job. There's not everybody can get that job.
Yeah, but then what happens eventually is that they are going to grow faster than McDonald's because McDonald's workers are not as productive.
But this stuff takes time. Businesses that open, we're talking about this like it's happening in the matter of minutes. This stuff happens over months, over years. When these new, like, it's not like there's just new companies are popping up everywhere and there's new buildings opening up. And this happens over time. It's not like these people they can just, well, I'll just wait till the next one opens that's willing to pay more for my labor.
But the idea is that McDonald's is just not going to go and lose all their profit because it's short-term cheaper. No, companies have a low time preference, right? They're willing to wait out things. They're willing to see that this is not a good long-term goal to lower my wages to $1 an hour. They would never do these scenarios that a lot of.
Maybe they don't go quite that low, but they go low enough where these people are barely scraping by. But maybe they're still surviving. Maybe they won't survive for very long. They can't support a family or anything. But they barely scrape by.
And then the Arby's that is increasing, right? They're going to be more productive because they.
But what if no one wants to go to Arby's because Arby's is less efficient? There's only one Arby's. I prefer McDonald's. Every town I go to, there's a McDonald's. There's only one Arby's here. They're still getting started. I don't trust them. That's not how consumers necessarily operate.
No. But it's so when you have
consumers have a propensity towards larger chains. I think that there's plenty of evidence to support that.
Again, the companies are completely variables, but it's
But we're assuming in this situation that there's multiple companies versus one that just has one.
The inefficiencies that are around with McDonald's production, because working for very low wages or to the point where you're not having the consumer to high hours and stuff like that, it is not good for the productivity, right? We can see this in China. They have terrible productivity because China is literally not allowing you to work. Work for under certain hours.
I mean, if we're acting under the assumption that I'm assuming you're acting like China is the provider of wages. Are you talking about businesses in China? Or my point is that it's happening. So if we're acting under the assumption that because it's not as efficient to have people working long hours for low pay, that it won't happen, you literally just pointed out that it's happening in China.
No, because the government basically forces you to. But that was kind of just an example. What I'm trying to say is that it's not productive. So Arby's will be more efficient at what they do because they have more workers. They're faster at getting the food out. Maybe their food tastes better.
Why isn't that happening today? If people can faster. Because I agree that workers are more efficient and when they have good sleep and they can work for long hours and you pay them well, I believe that workers are more efficient. But then why isn't that happening right now? Why doesn't In-N-Out is able to pay $15 an hour? Why isn't McDonald's doing that? Why isn't Burger King doing that?
Because they have
other factors.
They have lots of restrictions. There's lots of what's the word? I guess McDonald's is the best example because they have lots of benefits. They get a lot of colleges paid for and stuff like that. But even then, you still have lots of restrictions on competition.
See, but I feel like that's going to be the fallback to the point where whenever I critique the data and say that that's not happening, it's going to be like, well, we don't have a perfect free market right now. But then it's like I have a problem when we can't see anything actually borne out in data.
So yeah, if you just want to get into historical events with data, we can see data as it doesn't really apply to today's ideas at all because consumers' demands can change. So if we just go look at a purely data standpoint, the human mind changes over time. Data before does not apply to today at all. And
I mean, this obviously is a very broad thing that you're describing. I'm saying that we can look at the effects of minimum wage laws. Minimum wage laws from 2018 is probably fairly applicable to today.
No, but what I'm trying to say is why I reject empirical data is because it doesn't exactly show new market trends or how it can change to an adjustment period in time. Or
I think that's really interesting. Did you say that you reject empirical data?
Not empiricism, not empirical data. Sorry, I misspoke.
So wait, could you rephrase that? You reject what exactly?
Empiricism. So observations done after. Knowledge gained after the observation, how it applies towards the realm of economics. So things like assuming that this empirical data will have absolute effect and absolute truth over the future events.
I don't think anybody assumes that data is absolutely predicts the future. I think that it's incredibly relevant, and if your theory isn't borne out by any data, I think that that's
I don't
bit of a problem.
Any of my theory has like absolutely no data supporting it. I think there's definitely some data supporting what I am claiming, but again, I don't think that basing my argument off that is really helpful because it doesn't really show how future is going to react.
I think that the data is much more helpful than that. Obviously, we're talking a bit broadly here,
and
specific instances.
Especially if we're going off data, I think you have to support it with some kind of theory or reasoning, or I don't think that you can apply because then it's just saying, well, this happened, so it must be correct. So
but that's the thing is, I was giving my theory for what was like that's what we were talking about is the theory, and I said, why isn't that happening right now? And you're saying, well, that's because we're not in this society. So I gave the theory, I showed that it's happening, and you're still saying that it's not true.
No, I don't know. So your idea, I kind of got off in the praxeology debate there for a second, but so you said,
I'm saying that as the company becomes larger, they're going to be more efficient than their competitors. They'll be able to squash their competitors, and then they'll be able to hire up the workers. They can basically control wages at that point, and they'll be more efficient because they're larger, and that they'll be able to be they'll be effectively a private tyranny at that point.
So yeah, I don't see how the private, as they get larger, right, they still have to maintain productive. Just because they're larger and they're giving workers terrible wages or terrible.
Well, that's the thing is, as you get larger, you become more efficient with the things that you do.
Yes, but you still have issues because you still have workers that are not on productive hours. And you're losing workers to this other entity that is offering it.
But it's going to take. So I already squashed the Arby's down the corner. It's going to take time before the Arby's, the next, the Burger King opens up. There's a time period in between that.
No, but you said that this was off a pure extreme example. You said more of like a realistic example of like $11 to $12. The people would gravitate towards that, and because they are losing workers over time, they're going to have to be more productive, or they're going to lose profits, and that's not good for the company.
But that's honestly, frankly, I mean, we're pointing out a little bit. My problem with this in general is that this over time has ramifications. It's like saying when I say that a company that if we're talking, this is changing subject a little bit, but I'm saying if a company pollutes the river, I'm like, oh, that's not good. That's something that makes a free market economy not good. Is that companies can pollute rivers, and you'll tell me, well, they'll go out of business because people don't like when companies pollute rivers. But I'm saying the polluting the river still happens.
No. So the idea is no one would do this. It wouldn't be profitable. No one has a.
There's a short-term profit though in scams polluting.
Profits do not help them because it eventually loses. It loses lots of things. You're going to.
Do you think that people are perfectly rational, where they're willing to take what seems like losses in the now for long-term profits? Obviously there are people that don't operate under that perfect rationality.
Profits. You're going to take profits, but then you're going to lose eventually if you do this, and then lose that loss is.
And you'll lose eventually, but that hurts people along the way.
Not necessarily because no one's going to take these risks. It's not a rational decision to take these risks.
Well, it is rational. If I, instead of taking my waste all the way to the thing that's 10 miles down the road where it's safer and it wouldn't pollute anybody, if I could just dump it in the river next to my my factory, I'll just do that. And then it would, in the short run, it would be more profitable because I have to spend less time doing that. And if you don't think that people cut corners, I mean, this is where the empirical data comes into effect. But I mean, do you not think that people cut corners like in things like that?
I think they could, but I don't think that's a very beneficial thing to them.
I don't think it's beneficial to anybody, and that's why I think we should have regulations restricting it.
No, I
we got a little off tangent there, but you get what I'm saying at least, right?
Environmental is a completely different.
Yeah, it's a different thing, but still, that's one of my things is that we're saying like, oh, in the meantime, these new companies will open that'll take away the laborers from McDonald's or whatever.
These already exist. I mean, you're not going to have complete monopolies in a free market.
Well, and that's why would it become? I think that's what I'm saying though, is that eventually it would become complete monopolies or oligopolies at least, and you would see these large private entities that have
and
tyrannical control over people
be able to sustain themselves if they remained efficient. If they didn't remain
but
efficient,
even if you say that they can't sustain themselves, there's still the brief period where that's happening,
and that would not
even no matter how brief that is, that's real world human suffering.
Yeah, companies think of long-term profits. They're not going to think of this as I can have 2 months where I have my workers paying absolutely nothing and then I lose it all in a month. Like that's not.
It wouldn't just be 2 months though. Like that's like I mean that's why I think that it's helpful to look at examples. But I think that companies will, if they can get away with it, hurt people so that they can make more profit.
Yeah, but that's not really more profit. It's a short-term profit, and they lose a lot of profit down the line.
If they're thinking about it, but we know that companies go out of business, though. We know that companies are going to go out of business.
Yeah, but
so maybe they will lose profit. The people that make that decision to forego long-term profits for short-term profits, you could say they'll go out of business. They will. That still hurts people, though.
Yeah, but those jobs are still available. There's still a demand for those jobs. They will go.
But there's still those people that for a brief period of time weren't making enough to live. And what if they couldn't survive? What if there's real-world implications of that?
So yeah, I mean, so you're just basically saying that sure, it's not a rational decision, but the short period of time would still happen. Is that what you're trying to say here?
I'm saying yes. Yeah, exactly. That's a very fair summation. Yes.
Okay, so you're one. So let's say that companies in competition, they just don't want to remain profitable for as long as possible, which I think it's like people, you can't quantify how humans are going to act. They could do it. But even then you have private charities and you still have other job opportunities that are going to be popping up as there's still demand for labor.
I think that the reliance on private charity, I would question it. It'd be hard to quantify necessarily how much private charity there would be because
if we just got to go off history here as the only thing before what is it called? Before welfare programs, I think 1/3 of workers were on a private charity.
Wow! If you could send me a link that
I will.
I would love to see it. You don't have to find it right now, but maybe after. But that'd be.
I'll send it to you on TikTok after. Right. Yeah, there's private charities, especially when you take away taxation, are going to flourish because a lot of people are going to have things that they want to invest in. They want to help people, especially like the church. The church does a lot of things, and a lot of churches make you give like 15% of your income or whatever. That would go up as you don't have taxation anymore. And a lot of things would in turn be cheaper, so you could sustain yourself. But even then, there would still be tons of job opportunities occurring, right? Labor is not exactly a scarce resource here.
So wait, I'm still curious. I still am interested why you feel like monopolies would not occur.
Oh, it's because it's monopolies that are efficient.
Even monopolies of efficiency, even ones that are like, do you think that there are monopolies that would pop up?
Yeah, efficient monopolies. They would have to sustainably be efficient, or they would eventually lose profit, and they would eventually.
But once a entity becomes a monopoly, don't you think that they can get away with more, where they are still more efficient than their competitors, but still aren't doing best labor practices?
So no, because inefficient, so they can possibly be more efficient. But they for short-term periods of time. But as they have competition and the other company that is going to be in turn more efficient because they have a more higher labor source, they have more workers, and they're going to be able to produce more than them, or be at cheaper products. Like whatever what are you saying? Are they cheaping prices? Or are they gypping you on?
Maybe the safety regulations. They don't care if there's asbestos in the ceilings. They don't care if people have the proper safety equipment. Stuff that's not gonna, stuff like that, like asbestos, for example. You're not going to see the effects of that for 10, 20, 30 years.
So with that, you would still have people that would still kind of be their decision, and even that, I think. Hopefully I'm not wrong here. So the Austrians are going to climb me. I think that a lot of that is the one regulation I think Mises really wanted was I think safety regulations on businesses and stuff. And I think that kind of goes into private.
That is interesting to me. That there is still the support of some safety
I
regulations.
really hope I'm right on that, because if I'm wrong, I'm gonna get clowned and clipped. But I think it's like a private property violation to put people in danger, especially if they're going to get hurt, because you are your own private property. If you are putting people in hurt and you're not helping them sustain and live, it's illegal to do that. It's a private property violation to hurt and coerce on somebody else.
That's an interesting thought process on that. I have to go in like a couple of minutes. Is there anything else you want to touch on before
pretty much touched on everything. I think we kind of made some agreements that if we were in like a completely theoretical free market, that maybe minimum wage wouldn't need to be as high. Or
I don't even think it has to be a theoretical. I think if we look at somewhere like Denmark, where they have so much unionization, I think that even there you don't need a minimum wage. I think that there are instances where you don't need a minimum wage. I think in the U.S., as of right now, we do.
And like and if we just go, because Denmark has like very high market freedom. They don't have fairly any regulations. They're only real.
Well, they definitely do have regulations. I think a lot of that. I know what you're referring to with the freedom of their market and the less regulations. That comes from like we're really inefficient as a country with some of the stuff. We have like state laws and all the different regulations they have to do from state to federal. I think that causes some problems. No, I think it's a little misleading to say that they don't have regulations.
I think they're only that's not even regulation. The only regulation they have, I think, are safety.
They have safety and environmental, and they have things that I think are very beneficial. The more administrative regulations that we have in the U.S. that I personally also don't think is very good. They don't have those.
Yeah, they don't have anything like hurting competition, and they have private unions. Like their unions have always been privatized. It's never had any state force. It's always been unions that are discussing straight through private businesses. So it's always a private on private exchange. And the problem with the United States unions is they basically lobby the government for things like a $15 minimum wage. And that's where they have too much power, I believe. And you won't have a result as Denmark as you have wages basically exactly at productivity.
Well, we both support any lobbying, so I think that's a good spot to end on.
That's a very big step. I think taking away anything that has government effects on competition will definitely help competition and wage rates.
We'll probably disagree on that. But anyway, all right, I'm going to head out.
Yep.
All right, this was fun, man. We got to do it again sometime.
Yep.
All right, you have a good one.
You too.
Bye.